What's up, guys, and welcome to Spark and Trade. We are here to talk about the top trades today and the trades that I took. And with the choppiness of the market, it was quite an interesting day, but let's get straight to it. The market definitely provided some opportunities, despite the fact that we have CPI and PPI data coming out. A lot of people choose not to trade under certain conditions, or it probably is a reason, one or the other, for them not to. But based on what I've kind of experienced within the last 5 to 6 years of trading, the market, I don't even trade news, but the market will move. And if you have an edge that can take advantage of a move, then you can make money in this market. So with that being said, we woke up this morning, we didn't have any bias, and we looked at the chart, and here's the kind of process that I go through. Let's take it out. Let's take a look. So straight off the gate, we'll take a look at the 1 hour chart. 1 hour doesn't have much new evidence to show us. We are basically hovering above and below this level here. Mouse on the bottom is at 411. Mouse on the top is at 4162. So 4111 and 4162 is the 1 hour ping pong range that the market should bounce above and bounce from and reject. So as you can see, we rejected. Didn't even make quite up there, but ended up coming down. And we're basically given this condition here before the market opens. Okay, let's go into the 15-minute. 15-minute shows us that we can ping pong between these two levels, but we were already below this level, so I had to go find another demand. I didn't have to, though. I could have just made this demand that was breaking down, which would probably fuel your bias to think that the market was going to come down, or give you an idea that, look, that level should be something that we retest. So if I can find a 5-minute demand, we may go back up there, right? Just a trade idea. It's a supply. It was a demand turn supply now. So either you take the rejection from that level, or you take a bounce into that level, and now you have your levels. So if we look at the 5-minute, that's these white lines here. A possible demand zone would have been the 4136 level. So straight out the open, let's look at why SPY ends up coming down into 930, hits 4131, blowing right through 4136, which was this previous demand. So boom, it comes down, comes back to that demand that was now supply, breaks through it, hits the supply, the 5-minute 4140 supply. And I try to get this entry, kind of broke above it, but with that wick, it gives me confirmation that maybe someone's trying to sell from up here, the big wigs, and the market comes tumbling right back down into the 4133 demand, which is a great thing. It would have been a great play with very small risk, because I really don't have anything to look left other than kind of like this level here to kill the trade on. However, if we go in and just kind of, I'll stick to this chart. Oh my God, this is beautiful. So the reason for this trade was I missed this entry. I'm trying to now get an entry on a pullback into the next rotation to the downside, because we do have what I would consider a triple threat condition where the bears are in full control of this 1 hour. All we need them to do is kick in, and this red cloud, and you'll see a probable move down, right? So let's look at what that looks like. 15-minute has a red condition. They break above at that 930 push up that I missed into that red 1 hour cloud on the far left screen. The middle screen, and the market has closed. The middle screen shows you that once we tap that line up here, which is a 15-minute 4143 level, the market kind of reacted and came back down. So now I'm going to use 4143 as my defense zone. So let's get into the 5-minute far right chart. I looked for the market to come up, very patiently waited for them to break this level. As they hit the top, I ended up taking the trade. I ended up putting an order up there. They wicked me, came back down, came back up, went slammed, and then the white candle indicates we probably are going to see some green. So I'm like, okay, I have a 4143 level that I want to defend, and I'm taking shorts based off of a triple threat condition. However, the bulls have taken over the 5-minute, but I still have 2 time frames that are bearish. So either I switch sides, get out, bail, whatever I need to do. But now I'm really playing the supply and demand zone. So you have to kind of factor that into your whole psychology. And I said, all right, well, bet. This condition can change because it's a 5-minute condition. right? They can flip, the bears can flip the bulls in this condition. So that's what I'm banking on, basically banking on, with a stop above a supply level, 15-minute supply level at that. So I take another entry as we break above my original entry zone, bringing my average to about 41.39, risking 41.43, I believe. And that gives us about a 4-point move, a 4-point stop. So now I'm 2 contracts in on a 4-point stop. I'm trying to take 4 points at least to 8. That brings us to about right here somewhere. All right, 41.31. That's a 2x trade, but a 1x is at 4 points. I'll take it a little bit beyond 4 points, because immediately we go from here to here, which is 682. That's almost 7 points. So I'm almost there, right? I need that nice 8-point move because of the average. And this one here, we ended up getting it for a good 7 points. But the down move came, didn't take anything out right here. Market bounces back up. Now that we understand the conditions on the left, right? Basically the zones that we're going to reject from. We know what we don't want the market to do, which is break back above that and make a higher high. Market comes in, takes back all the money it gave me on this wick. I could not believe it. I thought that was going to be when the move triggered. Ended up coming back, no problem. Gives me some opportunities to get out. Takes it all back within 1 5-minute candle. The bears come right back in and slam that bad boy down. We start to break this level here, which is 41.36. No big deal. We broke that level before and found support somewhere down here. Immediately, I start seeing this support demand building. And when I saw that demand building, I already said, all right, I'm not about to go through the roller coaster because I've already been in the chop price action. Let me take this 1.7, 1.6 R trade and get the hell up out of here before you guys bounce. Thank God I did that because the market kind of gave us blues, whites. So it's knocking, right? Big fight here, giving us the white and blues. Blues tried one more time. Reds got overpowered. White came in. White means you should see green afterwards. Green came in and it was over. The bulls took this bad boy way back up into my stop range of 43, breaking through that, hitting a high of 45. Now, I did not take this second trade that you see on the screen here, but this is a perfect condition for, remember, this is bearish. It's not going to change anytime soon unless they did a power move. So we don't even need that chart here. But the 15-minute, what kept me in this trade the first time was the 15-minute created this demand zone right here. See this red left chart, red line that came in. We just start seeing wicks up here. The lines are supply levels where volume comes in to take the market, to stop the market from just shooting up in a certain direction. If people are going to take profit, and meaning the bulls, whoever took the longs down there, they're going to fuel that sell-off, and that's the sell-off that I sold into. Now, down here, we have another 5-minute demand level. I can't take this trade because I don't have a 15-minute demand line. The market ricochets and shoots all the way back up. It would have stopped my trade out, and it would have been a loss instead of a gain. So once you hit R1, definitely start taking some profit. I mean, I even talked to you guys throughout the trade where you could have taken profit on this move. I stood through this. I stayed through this, and that was painful. Well, only because I watched it, but I'm learning to develop the psychology to kind of like deal with anything until you stop me out, unless I get the decent move that I think should be right. Market bounces, goes back up. We get another 15-minute line up there. That's telling us that the bears are not giving up on this trend. They might kick in again, even though we have a higher low situation. And guess what happens? Most people, I drew this out for you guys yesterday. You can take a look at that video. Definitely give it a thumbs up and a like. Well, those are the same thing, a like and a follow. But the market, once it gives you this 15-minute supply area, you can either get in on a double top, a lower high, or you can wait for this trend line to break, which is the trend line that I'm using to determine that now the market has rejected that level. It's now going back to test that level. And if I see this wick, I'm gunning it somewhere around here, around 43, 44-ish, maybe this next candle. And I'm, going to reduce my risk to only 1.15 points. So that's a great R&R if we're going to go all the way down to, say, 89. And we hit target. Look at that. And the reason why we go down there is because that's where the demand is at, right? That's where the 5-minute demand is at. We've seen it all day. We've seen it here. We've seen it here. We've seen it here as early as the morning. Boom, came back down. Boom. So someone is buying that level. We don't care who. We just know we can trade that range and make money. And we can show this across the stock, but you just have to have a strategy to get in at that level. And I have nothing that tells me to get in other than 5-minute demand lines. And I don't really trade those because they tend to break. So boom, we get this move to the upside. I would have taken a short somewhere right there. I was telling my boy, shout out to LMD, living his dream trading, doing the damn thing over there. Check out his Discord, check out his YouTube. But yeah, we end up getting this supply line. So I was like, oh man, condition 1, supply line on the 15-minute. Condition 2, take profit dots, means that the buyers, the bulls, can sell this market off from this area. I would have entered there. Market comes back, tries to get another like kind of retest of this line here on the 5-minute, 41.44s. This big whale comes in and slams this with a DDT, boom, right in its chest, comes down, almost hitting target, but definitely hitting a good, like, maybe, I don't know, 4R there. Market rallies, buys this thing back up. I'm under the assumption that, oh my God, we're going to get that move like yesterday where they squeeze out the shorts. Nope. They come in at this 200 moving average, bring the market back down, triggering a possible flush. And then finally, this white candle does not see a better green side. It sees the red ferocity of the bears, and this market comes tumbling down, hitting target, and then doing what? Bouncing, but straight into the money zone for the bears. And now you have a triple threat condition again, where this market could probably reject that. Who knows? Who cares? The day is over. I hope you had a great time understanding how we would take this reversal trade here. And even though this looks like a reversal trade over here, it is a trend trade to the downside, where the 5-minute is not necessarily aligned with the triple threat, but the 15 and the 1 hour are bearish, and we're just basically taking a pullback into a 1 hour money zone for the rejection of the big dogs on the 1 hour. Okay. And it just so happened that we ended up getting a 15-minute level that turned this into a possible supply zone trade. All right. So these lines are really, really interesting, how price reacts to them. We have them basically drawn out every morning, so you can see or kind of formulate your own decision as to like whether you're going to go long or short. I never really tell anyone which way to go. I just tell them which trade I'm going to take. And a lot of the times people have some really good ideas for the market, and I could be wrong sometimes. It doesn't matter. I'm going to stop out. I have my edge to like make it very, very small, and I think that's what's important. So I'm doing these installments to like kind of record myself actually executing and exercising that edge, those plays from my playbook. I only have 3. You've basically only seen 2, which is the reversal trade and the money zone entries. You can't really tell from here, but if I just gave you the 1 hour chart, trade this morning was this one here. I got in at this red line, red band, money zone. For the red, meaning bears. So go short, long, short the market. Again, it did it here. You would have dealt with some drawdown. That's why you have to have a stop somewhere. The previous swing high stop would have stopped you out. You would have probably gotten back in on this candle here, and then you would have probably made your money. So once again, we're faced with that possible condition again. You just keep doing it until they exhaust it, because you never know what's going to happen. And this move was pretty nice, but we were sleeping. So that concludes the trade recap. Thank you guys for watching. Like, share, subscribe. Tell a friend, man. We're having fun trading every day, just chit-chatting, talking, and watching out for these levels to basically bust a move with some really, really good risk management. And I'm no perfect guy yet, but trader, but I'm working on making sure I just execute those trades to the best of my ability. big shout out to Mark Douglas helping me develop that idea that I don't know what the market is going to do, nor should I care. But if the edge's data shows you that you can be a successful trader if you just follow the rules, then just follow the rules. And it's easier said than done, trust me. But I'm very, like, I can show you the rules over and over and over and over and over and over and over. So that way I know where the enemy is going to possibly bounce at, on a short play, reject on a long play. And it's just greed that keeps you in for more. So the only thing that I think, if you want to make bigger, again, there's two ways I can do this. This is too much. Anyways, thank you for following. We'll check you guys later.